Hi everyone, let's go over my medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with the medium time frame diagonal scenario where we're looking for a 5-wave structure to the downside where each wave should consist of a 3-wave structure, which is a zigzag. So a 5-3-5, for example, in this wave 1. Now for me, this is an alternative scenario, not preferred for two main reasons. First of all, this wave 2 retraced to the 0.5 Fibonacci, taken from the high to the low of 1, which is a rare target for a wave 2 in a diagonal, with the more common targets being between the golden pocket and the 886. Then if we look at this wave 3 to the downside, what you want to see is either another zigzag in a 5-3-5, or you want to see families of the zigzag, which then is a double or triple zigzag. Now a double zigzag is that you have a 5-3-5 as a first zigzag over here. So a 5-3-5 followed by correction, and then another zigzag 5-3-5 to the downside. This is then a double zigzag. And a triple zigzag is another correction to the upside and then another zigzag to the downside. The main problem here is if we look at a potential double zigzag, so this can be a first zigzag to the downside, a 5-3-5 to the downside, that's nice. Then we have a corrective structure to the upside, that's fine as well. And then over here, we could have another zigzag. The problem is that this zigzag on my chart, at least only on a few charts, took these lows, and preferably in a double or triple zigzag structure, you of course want to see each zigzag going lower, but this low over here did not take these lows. That's not really something I like to see. So if this is a zigzag, it's not very nice because it didn't take the lows. However, if we want to count a zigzag like this, we get a problem because then there's overlap. So if this is an ABC, meaning a 5-3-5, and we are now looking for another 5-3-5 to the downside, for example, in this scenario, if this is then a wave 1, 2, 3, 4, 5, before then a correction and another 5-wave move to the downside, we have overlap over here between then a wave 1 to the downside and this wave 4 to the upside, which is not what you want to see in an impulsive structure. So this wave 3 at the moment is not clean at all as a zigzag structure or a double or a triple zigzag structure in this diagonal. And then finally, if we do look at the volume, because volume is important, the volume actually looks good. So the volume on average, you want to see volume moving down. There is of course like spikes, but you can see that volume, it's not too bad. I mean, it kind of depends how you pull it. It's almost like volume is the same, you could also say, but we're in a corrective structure or a diagonal structure, and in both cases volume tends to become a little bit lower as the patterns are evolving, so you can't really read the volume at the moment. If we then go towards the medium time frame bullish scenario here, which was one of the ones that we were looking for, we are then looking for a WXY scenario. So in this scenario, this zigzag is part of a W corrective structure followed by another corrective structure, and now we're looking then for a 3-wave structure. And in this more, let's say, bullish scenario, we were expecting another move up before a move down. Now in this scenario, we then have over here a 3-wave in A or a 5-wave in A. Both are good. Follow then what we were looking for a 3-wave structure in B, where you can have an expanded flat, which is a 3-3 and then a 5-wave move to the upside to then at least take the highs of this structure over here, so the double top basically at 27.4k. Is this wave B now invalidated? Well, not yet. We have to go a little bit deeper because the 1.618 is also a rare target for wave C. And what I explain now is actually important because that means there still could be a 3-wave structure. It is not preferred based on the volume, high volume to the downside. 1.618 is more common a wave 3 target, another wave C target. But as candles, you want to see candles move or continue towards the downside to really invalidate a wave C. Now this scenario therefore becomes an alternative and not preferred because of the rare target for a wave C over here. But in this scenario, this is then a 3-wave structure to the upside, followed then by this being a zigzag A. Then we have a wave B, and then you have another zigzag over here. So this is then a double zigzag structure, where this is then a wave A, B, or a W, X, and then eventually a wave Y. So first zigzag to the downside, correction, second zigzag to the downside, where the second zigzag, A, B, C, is incredibly short to the first one. That's not really something you like to see. So that's why currently the probabilities are more on the side of this being an impulse to the downside than this to be a corrective structure to the downside, which means that this scenario overall, with another move first towards the upside and then down, is becoming more of an alternative based on probabilities. If we then look towards the medium time frame, more bearish scenario that we were looking at, we were looking at this again, a WXY in green, but now we have over here a wave W, so a 3-wave structure to the downside, followed by a wave X already finished, and then we're looking for a 3-wave structure to the downside, where again, this can be the first structure in a zigzag, followed by a second corrective structure, and now we're then in another 3-wave move to the downside, where this is likely only the first part of a bigger 3-wave structure to the downside. In this wave Y, the most common target area for wave Y over here in blue, that is, so this structure is between the 1 and the 1.236, which is between 24.4k and 23.8k. And the most common target for wave Y is between the 1 and the 1.236, which is between 23.7k and 22.7k. But I do have to say the 0.618 is also a common target, but we already passed it. That's why I removed it. So the 0.618, we already hit it twice over here, and now we move beyond. But in the green wave Y, this whole area is a common target for wave Y. So we are already inside that area, but now for Y, it would be nice to move maybe down a little bit further. Also, if I open the target boxes, we are currently at exactly the yellow target box, which is between 24,850 and 24.3k. And we've been looking at this area, of course, for a long time already. Now we have a little bit of a bounce, and we wait and see, of course, what happens on the lower time frames. But at least so far, we had a bounce on the yellow target box, but there's much more support. We only reached the daily naked point of control that we have over there. So if I quickly open, you can see here the daily naked point of control. We hit it for then a first bounce, but there's many more confluences in this area for price to find. So in the bearish scenario, we then expect this structure to be also the end of a corrective structure, after which you then expect an impulsive structure again towards the upside. So once we reach like the areas, or let's say this is a 3-wave move and the 3-wave move has ended, that is the moment you then from the lower end, you want to see an impulsive structure to the upside again, right? You want to see a 5-wave move for then looking for higher prices. If we then move towards the lower time frames, I go to the 1 hour, then over here, we are again then looking, as mentioned, for a WXY or an ABC, and that depends a little bit on how you want to count it. So a WXY is, I think, preferred, where you then have a 3-wave, and then you're looking for another 3-wave structure to the downside. And that is mainly because if we look at an ABC, there's either going to be overlap or a triangle in 2. Now, a triangle in a wave 2 is not allowed. You can't have a triangle in a wave 2. And what I'm talking about is this being a ABC. So we then have this as a wave A, B, and then a wave C, which is a 5-3-5-wave move to the downside. But this wave A does not count very nicely as a 5-wave structure. So if this is then potentially a wave 1, and then this wave 2 is a triangle, well, a triangle in 2 is not allowed, because then you have an A, B, C, D, E. It might count nicely, it might look nice, but in a wave 2 is not allowed. It is allowed in a wave B or a wave X, however, but that's when you get towards a W and not a wave A anymore, because then this is a 3-wave structure, another 5-wave move. So okay, if then this is the low of a wave 1, so we just think wave 1 is then a diagonal, 1, 2, 3, 4, 5, like this. This is the end of a wave 1, this is 2, 3, 4, and 5. The problem here is that if this is part of a wave 4, right, wave 4 over here, and this wick is part of a wave 4, it has overlap with the low of wave 1, which is not what you want to see in an impulsive structure to the downside as well. So that is not that great. So it's in that like perspective, a WXY is more likely. So that's why I now remove the ABC again, which means you want to see a 3-wave structure to the downside in the white wave Y, where then again the target areas are already mentioned over here, and we of course have that yellow target box that we are finding support on at the moment. So now we have to wait and see, of course, what price is going to do locally, and see if we get a little bit of a bounce or not. Now, when we go to the micro, yesterday we were talking about the news, and one of the things that I mentioned was this. This is a screenshot from the video of last night before the news hit at 8 p.m. I believe. So over here, what we were looking for was a move towards the upside to take the high of this wick and then move towards the downside to grab the double bottom at least. Now if we quickly zoom out, then over here, this was the double bottom that we were looking for. And what we were looking for was price to move to the upside and then move down. That is the line that I show over here. Move up, take this high over here, and then move to the downside to at least take the double bottom. And then we have to wait and see how price is going to move to the downside. I was in a live stream here for the gold members at that moment in time. We were observing this as it happened, which was very, very nice. Price moving up and then dumping to the downside, which is exactly what we were looking for. Of course, it went much further than the double bottom. We didn't have any reaction over here, not a swing failure pattern whatsoever. It just continued absolutely fine, right? We don't catch knives. We want to see some proof of support before potentially entering. There was no proof of support over here. So now we wait and see what happens on the lower time frames. But I like to give price a little bit of time to create some structure, because this might be a potential 1, 2, 3, 4, expecting another low to the downside. Because if we look at the volume, the highest volume is in this candle, which, if it now moves to the upside, means this is an ABC, but usually and more commonly, because price hit the 1.618 trend-based fib extension from the high to the low to the high over here, this is most likely, based on probabilities, a 5-wave structure in a 1, 2, 3, then a 4, and eventually a wave 5. So, I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye-bye.